This is a short walkthrough of my read of the 5-minute chart of the S&P 500 futures trading session. The day kicked off with a gap up, and the first 2 bars were decent bull bars. But then 2 bear bars came in and reversed things, big up, big down, which pointed toward a possible trading range. Still, the gap up was making me lean more bullish. The bulls printed a long string of bull bars after that, forming a bull microchannel, but the bars weren't particularly strong. There were dojis mixed in, big wicks, nothing that screamed conviction. Things got interesting on bar 14 when volatility picked up and the bulls broke the previous high, though the bar closed with a big tail on top, which was a warning. Bar 16 was a bull attempt to break out, but the bar wasn't strong enough for me to take, and bar 17 gave weak follow-through. Dojis started printing, telling me the breakout wasn't really holding. I wanted to see if we could get a breakout pullback at the top of the range. Prices stalled and formed a micro range between bars 20 and 23, sitting right between the 20-period exponential moving average and the Globex high. That's a difficult area to buy, even in a bull flag. Bar 24 printed as a bull bar and looked like a breakout pullback, but it still wasn't strong enough for me. It would have worked for a small scalp. Prices did push up to the Globex high, but bar 26 printed with a tail on top, showing the sellers were waiting right there. Bar 27 came in as a good bull bar, a high 1 buy, and a micro breakout pullback of the small trading range. It wasn't an ideal trade, but I've been watching subpar setups all morning. I felt like I just had to get on the bull train, so I took the chance. My risk was 14 points down to the last swing low, and I was targeting 1-to-1 risk reward, 14 points of profit. Prices stalled though. Bar 30 had a tail on top, and I decided to take it off for a small profit rather than hold through uncertainty.
Target filled.
I still thought the measured move of the opening range was reachable, but staying in trades that aren't ideal is genuinely hard. I collected plus 3.5 points and moved on. A bear pullback developed from bars 33 through 36, and bar 37 came in as a great bull bar, a high 1 buy, and a visual second entry buy.
Order filled.
I placed my stop loss below the previous swing high and targeted 1-to-1 risk reward, which would have put me right around that measured move of the opening range. Bars 38 and 39 gave decent follow-through. Bars 40 and 41 stalled, but I wasn't going to let myself get shaken out too early again. Bar 43 printed as a strong bull bar, but then 2 dojis followed. At that point, I made the call to exit.
Target filled.
There's a fine line between cutting too soon and recognizing when risk is building. I felt the risk was getting too big. It turned out to be the right exit. The bears started their reversal on bar 51, put together a microchannel down, and then came in hard on bars 54 and 55, with strong selling. I was watching for a short below bar 54, but it looked too climactic, so I passed on it and waited for a pullback to the exponential moving average. In hindsight, that short would have been a great trade, but the risk was huge. Bar 57 gave a nice bear bar as a low 1 short, but we were far from the exponential moving average, and selling that low didn't feel right to me. That one would also have worked, as prices looked destined to test all the way down to the regular trading hours open. And that's exactly where they went. Bar 61 was a low 1 short as well, but by that point we were sitting very low in what turned out to be a big trading range day. Not the bull trend it appeared to be early in the session, but hindsight trading is always the easiest trading. The bulls put together a 2-legged pullback back to the exponential moving average from bars 62 through 68. I was watching for a second entry sell to retest the lows, but the day was running late. Bar 70 closed as a good-looking bull bar just above the exponential moving average. A major trend reversal for the bulls was possible, but there just wasn't enough time left in the day to justify it. Overall, a pretty decent day. The sudden volatility we've been seeing lately is definitely affecting my trading and making me more hesitant than I'd like to be. Thanks for watching. If you liked this video, don't forget to like and subscribe to the channel.